Ladies and gentlemen, welcome to KFJ35435431331312112015 Forum Indonesia Chapter. Introduce me, Ratu, as your MC today, and I hope you will enjoy this forum as much. Next, Mr. Freddy Wala, as a chapter president, will guide this forum. Let me invite Mr. Freddy to join us. To Mr. Freddy, please come forward. Give applause, please.
Thank you all for coming. I really appreciate your valuable time. And without further delay, I would like to have our distinguished panel to introduce themselves, and then maybe a line or two what they're grateful for. Okay, can we start from Pak Edward? Yeah.
My name is Edward from IdeoSource, and I'll be presenting for Turing Sense. Yes, I'm very grateful, seeing, a lot of potential investors here, definitely. And yeah, looking at the Turing Sense as an investment portfolio companies that IdeoSource has already invested. Definitely, we have, good beliefs in this company, and it's a silicon-based company as well, actually. Yep.
Hi, my name is Bambang. I'm in the financial services business. I do asset management, consumer finance, and today I'm very grateful to learn about the technology space that probably this is a new area that I can set up an angel fund that we can participate in the new world, in the IoT, Internet of Things. Thank you.
Thank you, Pa Freddy. Good afternoon all. I'm from the same group from Babambang, and we are in the financial service, and we have a special business unit for angel investment to provide seed and angel round for the startups, not limited to tech startups, but we love tech startups. Also, Pa Freddy is a longtime friend for us, and he invited me to join KFJ San Francisco. And I really appreciate, and your setting here remind my time in San Francisco. Thank you, Pa. Yeah. And I wish to have more contacts with you guys or the audience here and see what we can work together. Thank you.
Hi everyone, my name is Carlson. I'm part of Saratoga Investoma. Saratoga is an active investment company. So our focus at traditionally be on traditional private equity type investments, which is like infrastructure, consumer, or natural resources. But what I'm really grateful for is Freddy's invitation, because technology actually plays across all different platforms. We can't really isolate something as traditional and something as just pure tech. So it's really good to be here to learn more from each of us here. So thank you for your time and look forward to having a great session.
Hi, everyone. My name's Rick Fisher, and I'm an investment banker with CITIC CLSA. We're active in the capital markets here, both for fundraising in private deals as well as capital market transactions in equity and debt. I'm grateful to be here, first because this is an opportunity to meet many future clients who we can help with their exits. But more importantly, I'm grateful to see this happening in Indonesia. We've already seen the impact that the early stage investors have had in developing businesses and technologies that really impact the society overall. So I'm really grateful to see that happening and grateful to be a part of that. So thank you, Freddie.
Hi everyone, good afternoon. So I'm Aryo Tejo. So I run a seed investment fund called Grupara Inc. So we invest like very early stage startups, which basically from ideation to actual products. And grateful part? Grateful part is I'm very honored to be invited here with all these high profile people around me, and also with, having you guys here. It's okay, right? Thank you.
Hello everyone, my name is William. I'm from Skystar Capital. We are a VC fund backed by Compass Gramedia and Saratoga Capital. I'm so grateful to have my LP and partner here with us and all of you guys distinguished guests together. I was very grateful to have experience in Silicon Valley back then 3 years ago to invest, and now seeing all this, the trends and all the dynamic atmosphere happening as we speak right now. We're having a Tech in Asia conference in Balai Kartini as we speak, and I heard that the current attendees is 4,000 full people, and that's like double the growth of the last year's conference. So I think technology is coming, software is eating the world, and I'm so grateful to be part of it. Thank you.
Hi everyone, I'm Rajan Srikant. I run the Keiretsu Forum chapters in Singapore and Chennai. And I spent 22 years in the US, started life in academia as a professor at Berkeley, and got into consulting, and now I'm running an angel investment group in India and Singapore. First of all, I'm delighted. I think seeing the number of people here is just awesome. And to hear all what my colleagues here have said in terms of the energy that is out there, in terms of, a friend here was just saying that students are choosing now to go do startups rather than go join established companies. And in fact, he was just saying a little while ago that their parents are actually encouraging them to do that, saying, what's wrong with you? Why aren't you thinking about something like this rather than going to a limiting kind of a career with a company? That is vibrancy, that's energy. And why am I grateful? Because actually I've seen that happen in India in the last couple of years. Okay, I've seen what that can do. Okay, a few years ago, if anybody talked about startup scene in India, I remember the professor, the head of the academic institution that I'm alumni of, said, what startups? Right? That was the word, what startups? We got 2, maybe 3 on campus. Today there's 90 companies in this academic institution, 90 companies in one educational institution. That's the kind of energy that I'm beginning to see from what I hear from my colleagues, I'm beginning to see here. What am I grateful for? I'm grateful that I have a chance as a Keiretsu partner with Freddie to be in on your ground floor, to work with you guys, and to bring deals to you and to take deals from here to India and other places. So that's what I'm grateful for. Thank you, Freddie.
Good afternoon, everyone. So my name is Anton. I'm from Microsoft. I'm the director for community, developer, and startups. So that's interesting role. Probably only Microsoft that has it in multinational company. So what I'm grateful is 2 things. There are 2 things. One is because our government now, government Indonesia, are very endorsing the creative economy. That's, I think, related with, Pak Srikant mentioned, related with the growth of, or the passions of the youngsters, the millennials, what we call it, to set up their own startups. That's the first one. The second one is, I'm grateful that Microsoft, not only corporate, but also Microsoft Indonesia, we have the right directions. We have the program, which what we call BISMART, to support providing for free software, the cloud and everything for startups. We also have the mentorship. We are working closely with the incubators, starting to. So I think it's something that I'm very grateful that we can participate and we can grow the people, the startups in Indonesia. Thank you.
Hi everyone, I'm William Gozali. So I'm an investment manager from MDI Ventures. It's a venture capital backed by Telkom Group. So we invest in Series A startups and above. And for early stage companies, we also have Indigo program to support startups from ideation to acceleration program. So I'm really grateful because we're such in the technology revolution here in Indonesia, and we have the chance to play a role here. And right now, to be in the same room with the people with same vision, it's really great. So we have to take a part to support game changers in Indonesia. Thank you.
Hi, my name is Mintarja Gotama from PT Semesta Indovest. We are a local securities house in Indonesia. We are very grateful to be here joining Keiretsu Forum. And we are not also attending, but we are also a member of Keiretsu, chamber member. I'm very excited because not only we can access of a startup and then giving access to our client and then direct access, which is moving out all of the premium of stock market, which is directly investing here. So most of our investors are excited to be part of this. Thank you very much.
Let's give him, Now I would like to invite Srikant Sharma for the first presentation. So the format is like this. He will be given 10 minutes for presentation and then 10 minutes Q&A. Yeah. So please feel free to write down your question, and then when the time is coming, you just raise your hand to ask questions. Okay, please.
So good evening, everyone. My name is Srikant Sharma, and greetings from the Bay Area in California. So I'm delighted to be here in the spirit of the question. I am truly grateful for Freddie's partnership and some of the wonderful people in this room here. So what I want to do is talk about what an exciting venture we're working on, Zenix. What Zenix is, we provide risk-intelligent collaboration for financial services. Now, this is a very key white space opportunity in the marketplace. And as we go through it, I'll explain why that is and what the case is. So what do? We basically are an enterprise collaboration company with a very specific focus. We bring secure, compliance-centric collaboration with what we call exact real-time risk metrics and risk intelligence for deal collaboration. What does that mean? In a specific ideal use case, picture an M&A transaction. You've got tax, finance, client, regulatory, government, and so on. Bringing all those teams together, making them work efficiently, measuring risk, measuring cost of delay, opportunity cost, everything, because every single risk point represents dollars at risk, or rupees at risk, or whatever it might be. That is exactly what Zenix does. Let's land the plane a little bit more. In the deep dive, I will show you a 2-minute video on how the product itself works. Conceptually, we bring together all your tasks, all your notes, all documentation, all discussions, all messaging, risk analysis, and it works on browser, mobile, and so on. So what is the pain we are solving? When we've talked to roughly about 40 enterprise customers, primarily in the US, the vast majority in the Fortune 1000, some smaller companies as well, they have consistently come back with 3 key pain points. The first is there's too many tools. Consumer-level tools like Dropbox, Slack, and they're all successful companies. They do not work in the enterprise because they present, when you have multiple tools working together, they present a tremendous amount of risk from the company standpoint. It makes it very hard to use them. So people say, heck with that, and go back to using something simple as email. The second is there's no visibility. As a team lead, I need to know what my team is working on, where are the risk points, where is the delays, what is the cost, how many teams do I need to do it, how can I drive additional and continued success, how can we measure performance. And the last thing is CIOs. Some of you in this room might be CIOs and technology CTOs, and you are losing sleep because content control, content provisioning, who can see what, who is forwarding what, a control-based architecture is extremely important. Enterprises, the single most important thing they have right now is security and permissioning and access control on their content. So our solution essentially is, this stack shows you, the bedrock and the foundation is enterprise secure architecture. Right here you've got a very strict content access permissioning. We bring together all your tasks, teams, messaging, documents in one simple application, and then we got a insights and risk intelligence engine on the top. So so who are the jockeys here? No, let's talk about ourselves. My background is, I've run 2 startups before this. I have done 18x and 11x returns to investors. My first company was called Solvos. We sold that to Hitachi. My second company was, we bought it initial investors at 11x return annualized. My background is I have roughly about 25 years experience in entrepreneurship, a deep background in financial services. I used to work for Goldman and for JP Morgan, a JV for them in New York. And I ran global marketing and for Interwoven, which became part of HP, and America's Sales and Marketing for OpenText. My number two, Chief Vinay Khosla, not to be confused with Vinod Khosla, but that would be nice. Vinay Khosla he's moved from the UK, he's an English guy. He himself has done 2 exits before, a company called Vivid Orange, he sold to Advent. He's got a tremendous background, strong operational candidate, and he has moved his lock, stock, and barrel to the Bay Area in San Francisco to take on the role of a CEO. He is also a significant investor in Xenix. Scott ran Sony North America, his GM for North America for almost a decade. Phenomenal background. And the last, of course, is Han Lai, and Han is from PayPal, HSBC, who runs our product. Every single one of these people on this page has invested in Xenix in cold hard cash. Then we went out to the market and said, who else cares about this? So we've got some very senior advisors involved in this. Some of you here from Microsoft, you'll know Bharat Shah. Bharat Shah runs Azure, and he, more than most people I know, knows more about cloud technology than you'd think. He came to us and said, this is a tremendous opportunity. This is a potential acquisition. He didn't say who, of course, but he says there's a tremendous exit opportunity, particularly in fintech. Ken Goldman, who's a CFO at Yahoo, obviously reports into Marissa Mayer. He has looked at it, he has invested himself, and he's also a key advisor for us. And last, of course, is Jay Parekh. Jay is one removed from Larry Ellison at Oracle. He does one board every couple of years. He looked at almost 24 companies. He picked Xenix. He's on our board, along with Freddie, who is one of our lead advisors, key investor, and honored to have his partnership. So Freddie, Jay, and myself are currently on the board, which will expand in due course. We've got investment from Kiretsu. We've raised about $1 million approximately from Kiretsu. I went to Kiretsu Istanbul. I'm here, was in Chennai, will be in Singapore, and we'll be covering doing the whole circuit. So what is our go-to-market plan? We are currently here. Enterprise collaboration. In roughly about 6 to 8 months, we will be taking on this tremendous white space opportunity of risk intelligence and risk for deal rooms and risk intelligence collaboration for financial services. Some of you might have the question, what does that mean? In the deep dive, we will actually look at the product, and I think it will give you a lot of answers. That is a tremendous value because fintech is a hot space, but there is a tremendous amount of software envy for financial services bankers. The competitive density, as you can see, there is virtually no significant competition in the marketplace in that area. Our financial services marketplace this is a banking and centralized in the banking, but there's also adjacent markets, tax and legal. You've got real estate, consumer, you've got corporate treasury, and you've got purchasing as well. This is a competitive space. Again, very sparse competition in the solution that we're trying to solve. Am I running out of time? I'll try and move along quickly. We are sitting in a very, very compelling and comfortable position in terms of what the fintech market needs, particularly with regards to collaboration in strategic deals. The market opportunity is roughly about if you look in the corner here, that is the obtainable market. It is a massive market. Even if you're moderately successful, that will be a pretty high value company from your standpoint. So one of our customers is Johnson Controls, a Fortune 80 company. And this is the feedback we got from them. It's only been 6 months. They started 12 seats. They're currently at 100. We're talking about roughly about a 300 to 3,000 range run deployment in the 2016 timeframe. This is a go-to-market plan. These are all detailed slides. I'm going to come back to this. Our revenue plan calls for roughly about a $70 million annualized recurring run rate in terms of revenue by 2018. We are planning, our aim of the business is to build a high-value business. We expect to start to see kind of exit opportunities sometime in the 2018 or 2019 timeframe. So the last thing, and I'm a little over, but let me come to the ask. So we already raised roughly about $2 million in our startup round. We're currently raising 2 more in a convertible note. This is the point, it's a pre-Series A raise. We already have roughly about 1.2 soft-circled or hard-circled, and we've got roughly about, so almost about, I would say, 60 to 70% there. Now, if everyone who said they're going to invest invests, we'll be grossly oversubscribed. But we obviously know that always doesn't work out that way. We're working towards a Series A for about a $9 million raise in the spring. Now, I want to stress the key point here. This is probably, I've done this twice before. This is probably the biggest single exit I can see, at least in the enterprise space. And it is not me saying this. There's a feedback we're getting from market analysts, from customers, from financial services. If you look at the historical multiple, currently it's running around 40x. But even if you do 15 to 20x, we believe that we are looking at north of $1 billion in terms of an exit by 2018. And with that, I want to take, I'm a little over, I apologize. And that's where we are. We are in the heart of the action. And I'd love to take any questions. Thank you.
Any question?
Thank you for the presentation. What would be your closest competitor in Silicon Valley or in Europe?
So if you look at the enterprise market, the closest competitor would be email. And the only real deployment that has a virtually 100% market share is SharePoint from Microsoft. The problem with SharePoint is it is a big solution, big company deployment, which suffers from very low usability from the average user. And this is coming from folks at Microsoft. So again, no disrespect to folks at Microsoft, but that's how it is. We are what enables enterprise collaboration to happen. Now, in the fintech space, which is where ultimately we're going, in the messaging side, Bloomberg and Symphony owns it. On the data room side, there's a bunch of those. But the real solution happens to be risk intelligence. No one has actually captured or defined how risk is measured for a deal in a deal room situation. So that's the, I hope I answers the question.
Thank you.
Thanks. So how do you bring together the various parties? How do they connect? And then when they're connecting in the information, are you analyzing the information for them?
Yeah. So the historical model has been APIs. So you've got, for example, Slack. And I'm going to give you the answer to what we do in 30 seconds. But the historical context is Slack is a messaging service, but they've got APIs into Dropbox, into Box, or into SharePoint, or into Salesforce, or others. The problem with APIs is APIs create a tremendous amount of porosity and risk for the enterprise. We have taken a completely different, almost an Apple-esque model, which is we build everything from scratch. We have a document repository which we built ourselves. Our messaging engine is our own. Our task and workflow engine is our own. Our notes engine is our own, each of which is a very, very powerful component that basically works seamlessly in the back end. And everything is process aware and task centric. So if you've got a project you're working on, let's say due diligence on Xenix, you know what your team is discussing, what the workflow is, who is doing what, who's running late, all the documents. We offer security clearances. So on your team, you can decide who gets what security clearance. So if you've got a term sheet, only top level security people can see, or top clearance can see it, others cannot. So there's a very rigorous content provisioning and access control system tied together. So right now, we are a monolithic solution. As we move along, we will definitely have to make some APIs, primarily into Exchange, Microsoft, and into maybe Salesforce or other similar things.
The next one, we will have our founder, CEO and founder of Keiretsu Forum. He will welcome us from Jakarta, and then later on, I'll give you a brief explanation about what Keiretsu Forum is all about.
Proud member of Keiretsu Forum, founder and CEO also. Very proud to be welcoming you to the 39th location globally of Jakarta, Indonesia. We're also very proud of Freddie Walla, who's been a wonderful Silicon Valley member this last year. Not only has he been a prolific investor, but a great leader too, and he's going to be leading the charge in Jakarta. The most important thing about Keiretsu Forum is you. The secret sauce is membership. So please get involved, participate, do due diligence, but join Keiretsu Forum. We're a global network with over 2,000 members around the world. The world's flat. We want to see great companies come from Jakarta. Bring them over to the United States. We'll hope commercialize and also invest in them. But today, I'm very excited to welcome Jakarta, and I look forward to seeing you the next 6 months, if you'll have me. Thank you.
Thank you. Okay, next I'll present you just a very brief presentation about the Keiretsu Forum. These are all our chapters. I'll do it very quick. This is when they were established. So we have a total of about 39 chapters. We started about 15 years ago from Silicon Valley. These are the areas where we have presence today. Jakarta is the last one, but many more will come. So yeah, next. Yeah, next. Okay, this is the event. Sorry, this is move back. This is the event in India. They just opened in Bangalore, and then this is the CNBC Istanbul, where Randy just opened a few years ago. Okay, next. Yeah. In last year, this is the spaces that all of our members invested in. Technology 31%, real estate 31%, life science 35%, and then the rest is 3%. Consumer, retail, clean tech, blah, blah, blah. In summary, Keiretsu Forum members have funded about 650 companies with more than about 600 million. The third one, we bridge from Silicon Valley to the world. So we bring in a lot of companies from Silicon Valley to go all over the world. And then we work closely also with UC Berkeley and Stanford. We have exceptional deal flow from Research University Technology. And also in the last 15 years from the day it was founded, we have a track record of investment through the times of booms and busts. And also we provide investors education. We have education for entrepreneurs and also for the startup companies. And then by being together, actually we lowered the risk for private investors because we will run through very thorough due diligence practices. We even publish iBook on due diligence. You guys can download it for free. Yeah? And then later on also we partner with other angel groups. Yeah. This is how it happens. Okay, we are the Angel Investors Network, and then how we get our startup. So usually in America, the typical is like this. Every month we receive about 30 to 50 applications from the startups, and then after the committee review, usually we pick the top 8 to 10 companies, and then out of these 8 to 10, they will come for deal screening. We have a committee like this, usually about 12 to 15 people, and then we will do deal screening. If they pass, they will have the right to present a Keiretsu Forum meeting, just like today, okay? And then after that, we will do due diligence, and then the multi-chapter sharing of deal flow. That's why I'm working closely with Srikant, for Chennai, for Singapore, and then I can take some of the companies here also to the US, to Europe, to raise fund also at the same time. This is the deal screening looks like. So we have a committee with a lot of discipline from all backgrounds. So we help each other to make a good decision. Yeah, next. This is the typical meeting in Silicon Valley. This is in Palo Alto. And then next. This is the East Bay, which is near Fremont area, and then San Francisco. This is the founder himself actually hosts, every month, three locations. He himself hosted. This is what we call Expo, the Capital Expo. We will have it on the 18th, where a lot of people will come from all over the world. Maybe usually about 500 to 600 people. Mostly angel investors and also a lot of startup. And then they also have exhibition. Hopefully we can do the same like next year. You know, when we're ready, we will do a Capital Expo. Okay, next. This is some of the profile companies that the members have already invested. This is Safara, 3.12 million invested. First close May 2012. And then Safara went also to other chapters to raise more money. 16 Keiretsu Forum chapters collaborated in the due diligence and participated in the funding. They tackle this MRSA issue. Yeah, I'm trying to invite this company actually in a month or two to come here also. Next. This is any meeting for conference call. When they presented, they already have about 250,000 small business users sign up, which is a very unique concept actually. It's a premier provider of global concierge service and solution luxury personal services. So they have 200 concierges, 1 million requests per year. So I'm trying to tell you how widespread it is. The ideas are from A to Z. Okay, next. I don't know, maybe some of the women here are using this product. It's called Clarisonic. A few years ago, they presented in our Seattle chapter, and then L'Oreal bought the company about a year ago. One of the companies went public at the New York Stock Exchange. Yeah, next. This is the latest one, Astellas Pharma. So they tackle some kind of allergy. I wasn't there when they presented, but some of my colleagues, they said that, oh, we passed because there were not too many Americans having this kind of problem. And then when they announced a few months ago, I think about 2 months ago, that this Japanese company actually made a payment, 200 million payment to the company because a lot of patients apparently, from Japan, this allergy is for Japanese people. And then they gave 300 million advance payment for the product. So right now, the early investors receive about 8 to 16% X return. Okay, next. So in summary, this is how I see it. I've been a member for about 2 to 3 years now. The way I see it is like this. When people ask me, what is Keiretsu? To me, it is about global quality deal flow. So meaning that international startup, for example, like Srikan already presented, he's from Silicon Valley. There will be another one, Silicon Valley company. And then there will be one from India. And then one is a German company. So international startup will come here. Maybe some of you will ask, why? Why Indonesia? Why you want to raise money in Indonesia? One thing, not only they want to raise funds, they also want to open the market, which is very important to them. And then also at the same time, I would like to bring some of good Indonesian startup to Silicon Valley and also to European countries to raise some funds also. That is why we have what we call Green Seed. Right now we have about 39 chapters, and on the average we have about 4 startups presenting every month. So every single month we always we have about 150 startups presenting anywhere in our chapters. So we have a lot of deal flow going, and we share that with each other. The second thing what I like about the Keiretsu Forum is about education. So I learn a lot from you guys, from everybody. Because let's say my background is, let's say, mining, but I'm clueless about clean tech. I'm clueless about, internet, about technology, about agriculture. But some of these people that I knew, in Silicon Valley, they have background all over the surgeon from Stanford, and then agriculture, and then hardware, software, everything. When they come, they speak, I learn from them. Yeah. And then the third one is about community and togetherness. This is exactly the point that Randy always stressed. That he himself, the background is from real estate, so he doesn't know many things. But he depends on other people actually to help him decide what to invest. In fact, he said that many of his money, coming from the investment areas that he's not very familiar. So he's really relying on, a lot of experts in the space. Okay? Thank you. That's all I have. So the next one, we will have the second company. Please welcome Pak Edward Kamdani for Touring Sense. Thank you.
Okay, thank you everyone. Touring Sense, as I mentioned, that this is a company in Silicon Valley that Ideosource, which is me, a company based in Indonesia, a venture capital, that we invest already in Touring Sense, and I presented Touring Sense on behalf of company Touring Sense itself. So if you see, this is a next generation wearable platform for sports, healthcare, AR, augmented reality, and virtual reality. So have you guys seen Minority Report before, and also Iron Man? If you see, when they navigate the screen, it's actually they use hands only. And basically this is the exact solution. But imagine, you're capturing not only the hands, but the whole body motion captures that we do here. So if you know some of the software that do a 3D motion captures, like Unity, they usually use 21 sensors to capture the whole body motion. Touring Sense, they can do 17 sensors so far to capture the whole body motion capture. And the good thing is that they don't actually need a studio. So now most of the solution in the market today, they need like a green room, to capture with a camera. But Touring Sense, actually, they have an independent hub that actually installed in the body, and that the information will actually be captured in the hub itself, and then captured through the cloud to actually calculate all the algorithm, and then feed into the mobile phone for the real-time capture. Yeah, so Touring Sense is they're revolutionizing the practice coaching injury prevention through optimizing. So if you see, the solution itself is not really okay. If you see that we doing only for the tennis and golf so far, because most of the founders, they're very familiar with the tennis community and also golf community, but in actual, they can actually go to AR and VR and healthcare. And the amount of potentials in this market and in this industry is, very huge. So the first target for Touring Sense is to capture the golf and tennis market. And then it will go to other sport. For example, I speak with one of the soccer enthusiasts in Indonesia that is actually president director of Persib, Glenn Sugita, and he said he's very keen to work also on the soccer sport, to actually study the effectiveness of all the soccer players. The good thing about Touring Sense is that it's started from day one with the patents. If you see below, Joseph Kamdani, he owns 46 issued patents already and 35 pending patents. So from day one, this company is already like a 46 patents company. And not only that, the CEO, Lai Min Hee, he actually is a PhD. And he exited a company, so he's a serial entrepreneur already. Joseph Kamdani is also a serial entrepreneur with 2 exits already. He used to co-found the Sanera exit to make data, and Kickfire is OLTP, but it's being developed into an appliance. It's also exited to Teradata. And then Lai Min Hee, actually, he also helped as a CEO to, from his previous experience starting a company, that he wanted not, with huge amount of investment from day one, but actually develop the company that, not investing too much in between. So it will actually benefit the investors with a high multiple. With the extended team, we actually also work with several experts, and not only in Silicon Valley, but also in Italy, and also in other regions in China for the manufacturing, and also in Indonesia for the animations. So the total market itself for Turing Sense, just from golf and tennis alone, is close to 57 billion US. And for the go-to-market, with the sensors that we just focus on the US market alone, we can tap into many of the ecosystems for the tennis and golf. For the tennis itself, we partner already with, if you guys know Nick Bollettieri, is a very famous tennis clinic and tennis camp in Florida, Bradenton, that he actually, through his tennis camp, produced a lot of champions. Yeah? Just like Serena Williams, Venus, even Andre Agassi. So they partner for an exclusivity for 4 years. And as far as the competitive landscape, if you see in the you Google the 3D motion captures, there is actually none that provide a solution like Turing Sense, in a way that most of them usually have to, provide an external computers, to capture the motion captures, the 3D motion. While Turing Sense, actually, we just hub, in a body that the 17 sensors can be captured on the fly and in real time. That's why they also think of doing this, solution, combining with the social, meaning that they will integrate into mobile application. So, for example, if you hit a forehand or backhand, like Federer, you want to copy a Federer, forehand. That is possible. There will be a signature that actually capture the movement of a Federer forehand. So you can actually, share through social media of your own stroke, actually. That, I hit a forehand close, to the motion that Federer is hitting, yeah? So, sorry, I think the time is close. So I immediately jump into this, a lot of technicals that, I can explain later when you guys, want to speak to me later. But as far as the market size, it's a very promising, cash positive company in the future, definitely. In 2020, we'll reach into 97, billion cash and net profit of 71 million US. Okay, as far as exit possibility, you see there's plenty of exit possibility where you see a lot of big companies, Facebook, Google, and other firms, Microsoft itself, Oculus, and Google itself is also focusing a lot in AR and VR. And even, you go to gaming, Sony, Nintendo, and Microsoft also focusing on that. So basically back to, my initial introduction that, if you see Minority Report, Jarvis, why you don't see it right now is, right now this is the solution actually. Okay, thank you.
Question? Why can't we do it using Kinect technology to measure impact using camera and this kind of thing?
Okay, so as mentioned before, the question about the social, I think it's very important that you can post or share your motion, not in the studio. Because Kinect requires you to be in a certain room with an external camera, right? But this one, actually, you can play, anywhere, in any tennis court or in a golf course, and then you can share it immediately through your mobile phone because it's connected to the cloud.
Thank you very much. next one is we have a slight change, so we will move the presentation 4 now, and then we move back the presentation 3. So I would like to invite Stefan and Miranda to come to speak.
Warm welcome from my side. Hello everybody. My name is Stefan from Ului, a PT and Corporation in Indonesia. Founder and team. So we have quite huge experience in 3 main fields, which is the IT for sure, because it's an IT product. We have huge experience in sales, marketing, and management, but mainly we have a logistic experience over decades, which are represented by me, Stefan Gansko, he's right, Alexander Wirth, working all in the field of logistics, freight forwarding, aviation business, trucking, integration, all those kind of businesses. So what is Ului? What is the purpose of Ului? Ului is, we call it a marketplace for express and door-to-door services. The main idea is you need to conceive that we have several levels here. One level is the provider of a transportation solution. One is their customers. So for the customers of those providers, we're doing a marketplace. For those providers, we're doing a kind of an aggregator, which means all this kind of transportation could be involved in one transportation and could be mixed into one transportation. So those days we have a very huge demand by e-commerce. We have a huge growing globalization, which is coming up more and more. And everybody found, most likely you made the experience as well, that transportation seems to be the bottleneck of e-commerce business. Currently, you have the choice when you want to send a package from door to door, from A to B. You could use the post office, which used to be marked as kind of slow, not really reliable, in some countries even not cheap. You can choose an air freight product, or let's say a freight product. You can also use a trucking product or whatever. Here we take air freight as an example. The air freight itself, the aircraft is maybe fast, so it can bridge continents in 10 hours. The air freight itself is very slow, still slow. Lufthansa, for instance, had a problem that they announced 5 days delivery in the 60s. They want to increase it to 3 days. Now they have it almost with 7 days for regular cargo transport. So it is also slow. That's, by the way, is because of all the services around the air cargo. It's the handling, for instance. So it's slow. It's rather more expensive than the post, and the reliability is also not the best. Third one is the typical courier. That might be some integrator like DHL, UPS, FedEx, and they are indeed the fastest solution of all those. Still, they cannot do a real same-day delivery. They need at least 24 plus hours. Main problem of them is the same like the air cargo business has. They have to consolidate the cargo those days. You have other problems like strike. This is something Amazon faced those days with DHL in Europe. Before the Christmas business, they start to strike. And then there are fixed environmental problems you face as well, probably, for instance, in Europe, snowstorms and those kind of things. So what are we doing? We are basically changing processes. We are not a tool, a platform, which is basically just searching prices. We're changing the process totally. We offer this to the aggregation, to the companies which want to work with us. We offer change processes. We use business intelligence to make that process fast. They can offer us the capacity. We are looking for free capacities for the customer. I explained it a bit the ant way, so we make it the best way. And in this moment, when we have transportation local side, door-to-door, pick-up, delivery, they can even use us. Then all on the market and have a better service for that. ePulsar is an e-commerce platform in Indonesia, will be launched next year, beginning of next year. We will work together as the platform, like I described before, for them, together with GNE Post Indonesia, Cardiac Logistic, and DBM. I have already also some agreements with the Post in Singapore for that. So we expect 180,000 shipments already from them. That's maybe the most important here. The market size, of course, is a huge market. There is many people touching the goods, the shipment. Yeah? And Post freight forwarding, they don't know who's touching it. Even KLM did not know. We know exactly who's touching it. We accompany with an electronic means the whole supply chain. And that's the protection. We're working together with G&E Post Centers, and we have APIs to them. We grab the data from them, and then we basically work out which is the best part. We mix them also. So it's not necessarily that one of the partner is doing the whole transportation. We mix them. We use geocode, for instance, GPS systems and those things to guarantee that this is the best and fastest transportation. Plus, what we will do is, maybe you mean the process change I was talking about. For instance, we would like to send, what I did when I was in British Airways also, the goods via a baggage, not via cargo, because we try to avoid all the bottlenecks in the cargo area. Yeah. What was the first part of your question? I forgot. Or was it answered?
How can you define the different responsibility for each party? For example, you ask Gojek to pick up some goods in Jakarta. Then the Gojek will deliver to Garuda office.
Yes.
Then Garuda will fly the goods to Surabaya. Then in Surabaya there is a ticket to send to the destination.
Yes.
Now, how can you divide the responsibility?
Okay.
So they don't blame each other if something goes wrong.
No, okay, first of all, as you have seen in the movie, it's a good example. So somebody here from Gojek picking the shipment up. Yeah, he gets the order. He's bringing it, best in the case, not to the cargo area of Garuda, but he's delivering it directly to the aircraft. To the aircraft directly means to the check-in counter. We treat it as baggage. Yeah? In that moment, they have a transition. They have a moment of transition. That's what they do with the app. So they have to confirm, I take it over. Yes, okay, yeah.
Hi, this is Daniel speaking. How may I help you?
Hi, it's Charity. As discussed, we need the document urgently in 4 hours.
Sorry, Charity, but I'm afraid that
Alui is like Uber, but for courier transportation.
no idea. How does it work?
Just go to alui.com. You can simply book online or via an app.
Well, I'll do the booking now.
Thanks a lot. Goodbye.
You are welcome. Goodbye.
Daniel makes the booking right way. He just needs 2 L's, selects the best connect and process the order.
Good morning. Courier service.
Good morning. You'll pick up the document for Charity, won't you? Here you are. Bloody fast. Amazing.
For your information, you can also use the app to get the status of your shipment at any time via push notifications. Goodbye.
Is that all?
Courier service. Hello. Please validate the delivery with your mobile tool.
Charity validates the delivery with the given secret code for this transportation.
Wow, amazing. You are already here. Cool.
Ulay is the fastest lightning express mail. Goodbye, Mum. My next customer is waiting.
Goodbye and thank you.
Charity considers about...
Okay, the general setup of the perception of the end user is clear, I suppose. So we have the 2 pillars, the aggregation and the end user of them. The next slide is showing you what we have already done. It's all focused on mobile and web technology. So user should create an account or has to be, they can do booking online, checking all the prices. The courier and the handling service is all included in that one as well. So we accompany the whole process. Okay. The distribution channel is probably an interesting part. What we try to do is we want actually to hide ourselves a bit behind our partners.
Thank you. This is one of those things that you get to do for companies that present. You know, so this company presented last Saturday at KFJ Chennai. So now here I am. I'm the company. So you know, all the errors and all the mistakes are mine. And if there's any good news, it's Dave's. Okay, so I'll take the blame. And you will understand the phrase here, he talks about it as an integrated trend-setting project. Okay, so the whole of the presentation is actually geared in terms of talking about a specific project, but it's a scalable project that goes way beyond that. And the value addition here isn't some breakthrough technology, it's in how he has brought together different things to actually create a sustainable solution to the need for timber. So the beautiful picture you see in the middle is the state of Madhya Pradesh in India. We'll come back to that in a later slide. Okay, so what is the pain point that Artisan is addressing? Artisan is addressing the pain point essentially around the demand for furniture that is growing exponentially everywhere, and particularly the need for flat board that will be used in the making of this furniture. Now the furniture market, just look at that, it's enormous. Oops. $350 billion furniture market, okay? It's very, very big and it's growing exponentially. So where do you supply the timber for all of this? So he decided that he was going to try and do something and address that. And in particular, by the way, many of these slides will talk about India, but I think you could substitute the make in India with perhaps make in whichever other country and it'll work just as well. So he looked at the fact that the demand for furniture timber is global, and he looked at how can I address that. Okay. All right, there you go. So what solution did he come up with? Bamboo. Bamboo. Grass, right? Bamboo is seen as grass everywhere. But what Dave looked at when he studied this business was how do you take bamboo, which is very strong in certain directions in terms of the length of its fiber, etc., and how do you make a very solid product out of it? And he worked with some professors in Germany from Fraunhofer University, and you'll see a little bit of that later, to create to basically to carbonize the bamboo fibers so that, and actually his tests have shown that carbonized bamboo is actually 20% stronger than steel. Right? That is phenomenal. From wherever you stand, that's phenomenal. That's great. In fact, he was talking about how in reinforced concrete, if you have the courage, you can replace steel with this carbonized bamboo. That's the kind of product, that's the technology that he's working with. Okay, so you take a biodegradable product, which is grass, and make a timber substitute out of it. In order to actually come up with a sustainable long-term solution. So that starts with the saplings, that you need a particular type of bamboo, and you need to be able to find out which bamboo grows and produces the maximum amount of, you look at that image there, look at the pith in the middle, how much of pith there is in that bamboo, right? How much of actually the core meat of the bamboo actually can be used, right? You cultivate that in large scale in these bamboo nurseries, and then you give it to farmers to cultivate, to grow the bamboo. There he bumped up against the issue of farmers saying, why would I grow bamboo when I could grow sugarcane and other higher yielding crop? So he told them, well, actually you don't need to grow bamboo on all of your land, you grow it on just the periphery of your land. Not in the inside of it, on the periphery of it. And when you do that, you actually also have some additional benefits, and I'll show that in the next couple of slides, which is actually, in terms of soil conservation, etc., it also helps. So he was able to convince these farmers to grow bamboo, and then he also sets up these factories in each of those, you see the primary processing units, in each of those bamboo growing areas, to take that bamboo without a lot of shipment and costs associated with and fuel associated with shipping the bamboo across to another part of the country, convert it into fiberboard, and then from those fiberboard produce furniture modules. Right? So that is the integrated proposition that Dave is putting forward. Okay. Now I told you that there is a benefit to planting bamboo that is just instead of taking over the entire land, just planting bamboo in the periphery, and that is basically that bamboo acts like a kidney, as he says, for filtration of water and holds on to soil. So wherever it is, you have problems with soil erosion because the land cover has been completely cut down. If you plant bamboo in the perimeters, you're able to actually conserve and hold the soil and prevent soil erosion. Of course, the fact is, as I said earlier, that's not all. Bamboo is also has its own properties of strength. Okay, so the specific first area where he's targeting this project is in the watershed areas of this river Narmada, which runs through the central state called Madhya Pradesh in India, where actually you would think one of the most unlikely bamboo growing areas. Okay, and whenever people think of bamboo growing in India, they think of the eastern states of India. Now, what Dave said was that's not necessarily the only place where you can grow it. You can also find other areas where you can grow it along the catchment areas of this Narmada River. Why? Because this is where soil erosion is happening in big time. Okay, and by planting bamboo, you control soil erosion, you give the farmer a second crop to grow, and you're able to produce something that is sustainable, right? So what does it do? What does Artisan Tech do? Right? They have a bamboo plantation. They promote bamboo plantations to help soil erosion along the riverbed. That bamboo now is being used in creating fiberboard, and that is actually not only creating revenue of its own directly, but also saving the losses from crop production from soil erosion. Okay. So there's a social agenda too. So what does Artisan do with the bamboo? It produces fiberboard, right? And this fiberboard is actually goes into furniture. IKEA is actually already committed to him, as has Walmart, that they will lift whatever production he can supply from this one project. Okay, so the financials, I don't have them. I don't have a slide on that here. Dave may have intended to talk about it. He fully expects that the very first plant in the very first year will generate $5 million worth of revenue, and by year 5 it will generate $250 million worth of revenue. Sorry, $50 million worth of revenue, not 250. And this is one plant. Okay, and it's not going to need any investment beyond that initial what he's looking for, which we'll talk about here. Just going to come back to this slide. He's looking for an investment which says 6.66 crores there. That's $1 million US. Okay. An investment of $1 million in one plant will produce $5 million in the first year in revenues and $50 million in year 5. Okay, and it's also having all these other social benefits. Okay, so that's what he's already signed up for this company, a debt financing from USAID that is to be used as working capital loans for this company. Okay, I've been given enough warnings to stop, so I suppose I should stop now. Yeah, thank you. And as Freddie said, I'm not in a position to answer Q&A here, but if you're intrigued by this, there's going to be the deep dive that's scheduled, right?
Yes.
And so people can join that.
Yeah, thank you. Okay, so if you have questions, please email us or you can write a note so we can forward to Dave. Yeah, thank you. Okay. So, okay, next I would like to introduce Jeffrey Joe to come up on stage to give about 10-15 minutes talk. He's a seasoned angel investor, and he would like to share about his knowledge on this.
Good late afternoon, everyone. It's really great to be here. So I will speak a bit about the technology trends that I've been seeing in the past few years. I believe that this is a very interesting times, and hopefully this can be something that's useful for everyone. So just a bit of Alpha JWC. So we have been investing in quite a lot of companies in Indonesia, rest of Asia, and also in the US. So one of my partners is Chandra. He's the first investors in Tokopedia, Traveloka, and all that. And currently, since the beginning of this year, we are using Alpha JWC to invest, and we have invested in 6 companies so far. So just an agenda. I think I would like to reiterate that how the technology has disrupted many industries. And I think this is very important for us to understand this, for us to see the real opportunity in technology. Second is that, of course, everyone knows, and I think everyone agrees that currently it's a very interesting times in the Indonesian technology landscape, because a faster growth is expected ahead of us, and mainly driven by mobile and smartphones. We also see large fundings coming in. Some people call it more smart money coming in. That drives a lot of drive the ecosystem. More and more entrepreneurs, more and more startups, which is healthy for us. And I personally believe that we are at the early stage of technology. So I believe that this is the right time to at least look at the technology industry closely and see if there's any opportunities to be made. So I like these slides. Maybe some of you have seen this, but just to re-emphasize on how internet companies and technology can disrupt some of the industries, right? Facebook, largest media owner. creates no content, and the valuation is huge, 200 plus billion. Alibaba, the largest retailer, owns no inventory, and it's valued at 200 plus billion. Uber, world's largest taxi company, owns no taxi or no transport, no car. Latest valuation is 50 billion. And Airbnb, world's largest accommodation provider, no real estate. Valuation is 20 billion. So I think this is very important when we think about opportunities. Sometimes we do not really understand, okay, how these companies can be very valuable. And if we understand that at least there are some case studies out there to show that if the company can become so large, if the company really solving a lot of people's problem, right, and people are really using it because it solves their problem, it can become very valuable. Just a bit on some statistics, and I think it's an interesting chart. If you look at some of the more developed market in the US and also in China, first of all, whenever the internet penetration is going beyond 20%, the growth is usually faster, and it drives by so many reasons. And one more thing that we think is interesting and relevant for us in Indonesia is because we believe that we are in the internet penetration inflection point, and that's important. Because why? Because once we grow that stage, the growth will be very quick, so that suddenly the industry is growing in a very short period of time. And I think most of us here are investors, and we know that whenever there's a crazy upside or downside movement, it's usually very fast. And what's also interesting is that in this market, usually there are winners or catalyst companies. In the US, we have Netscape, Yahoo, Amazon. In China, we have Tencent, Alibaba, and JD. But how about in Indonesia, right? Indonesia is a big country. We have a big population. We have big internet users. Do we see the winner yet? Maybe some companies are emerging to be a winner, but I think the market is still very wide open. That is why there's still a lot of opportunities in Indonesia. If we go to China now, I think the game is very different, because it's being dominated by few large technology companies. So this is a very important factor. Just a number, I think most people know we are expected to be the fifth largest internet users in the world, surpassing Japan in 2017. That also shows that the number of users, that the market is large enough to become self-sustainable, right? And maybe this is a bit different with the previous hype, maybe in the early 2000. I also understand that in the early 2000s, some of us here also started to look into technology, but it didn't really take off. Maybe one thing that I want to highlight is that the difference between today and 10, 15 years ago is the number of users. That's the number of markets. So that is why we cannot put the similarity between now and in the early 2000, because we believe that we already have the critical mass to really create a meaningful market. And what will drive the internet market going forward is simply one very strong factor. It's the mobile and smartphone. Indonesia is a country with a lot of islands, so having a smartphone connectivity, the internet connectivity using smartphone, it will definitely drive a lot of growth. And also because thanks to all these smartphone manufacturers that push down the price of smartphone, so it makes it more accessible to people. And this is also interesting to see the large fundings, right? So when we think about, okay, so it's cool, a lot of startups, some people are investing, so what? Maybe one thing that I want to highlight here is that if we look at some of the large fundings, it's funded by, I would say, global investors, right? And the global investors usually they have a lot of experience. They can relate to experience from US and some other more developed countries. And I believe that they're investing it, having a lot of considerations. And last year, we know large funding goes to Tokopedia from SoftBank and Sequoia. And I think this year, Sequoia has made 2 investments. One has already disclosed to Gojek, and I think the other one is still remain undisclosed. So the trend is that, okay, more and more large funding coming to Indonesia. One thing that I can take from it is that maybe those big investors have started to see the real value that being created here in Indonesia. Okay, and then also increasing number of startups and entrepreneurs. May I know who went to Tech in Asia in the last 2 days? Can I see? Okay, not many, yeah? But just to let you know that the Tech in Asia is one of the largest events for technology, and a lot of startups there, a lot of investors. For those of you who have been coming regularly, I think I think we all agree that the number of startups are significantly increased, I would say. And not only the number of startups, but also the quality of the entrepreneurs. My partner Chandra started investing in 2010. He shared to me that back then in 2010, it's quite hard to find startups because not a lot of people know startups, right? But now we see different people trying to really get into this technology space, and not only young entrepreneurs, but also some of the most experienced one. I was working at Boston Consulting Group before, and I think there are 8 consultants or maybe even 10 ex-consultants now working in Traveloka, meaning a high-paying job, very experienced people also from consulting, from banking, also trying to get into the technology. If you ask me why, because I think those people really see the value that can be created in technology, and definitely can see the opportunities that this is the right time to really create something in this space. So this is also something that's very, very important to take note. And I think a lot of people in this room say, yeah, all that's good and rosy, but maybe a lot of people ask, are we in a bubble? Right? That's one very common questions that people outside technology ask me. And I think let's go to the definition of what is bubble. One definition that I can find is bubble happens when the price for an asset exceeds its fundamental value by large margin. So this statement alone shows that this when we talk about bubble, maybe we should look at the whole market in overall. Are there a lot of big companies yet in Indonesia? I think the answer is no. We are still in the early stage, right? And if we look at the next slides, usually there's a market sentiment, there's optimism, excitement, thrill, and all that until the desperation. And also this cycle also relates to how many people have made money from technology investments. Once people get excited, maybe more and more people get into investments, and when a lot of people are coming to investment, maybe then some people can get burned. But in Indonesia, if I ask who have made money from technology investments, I believe not a lot. Why? Because it's still early. And if we are still early, can we experience a bubble? I would say maybe it's not a bubble. If let's say the economy is slowing down, yes, of course the fund flows will be tougher. That is why I think in investing in technology we need to take a few very, very careful decisions, and I would like to share with you some of the thing to look out for. This is based on my personal experience in the last few years in looking at the technology companies, especially in Indonesia. And please take note that this can be different in the US, in the China, or in India, because Indonesia is still an early market. One is the understanding the product market fit. So what is product market fit? In technology, product market fit is everything. And so does all the entrepreneurs know what is a product market fit? Maybe not, right? So product market fit, so one way to really understand the product market fit is to really understand the customers. We might know what works in the US, we might try to copy it here, but does that solve a problem in Indonesia? Maybe not. That is why it's really important, one, to really understand the customers, do a lot of survey, talk to your potential customers or the potential users, and also once the product is developed, then those entrepreneurs really need to understand what metrics that they need to track, like the retention cohort, which is the quality, right? What is the customer's lifetime value? So all those things need to be considered carefully, because otherwise they might just create something that people do not need and do not use. Second is leveraging technology to scale and defend the business. I've seen so many entrepreneurs I think, especially in Indonesia, it's quite interesting because most of the founders are business-driven founders. I think there are a few reasons for that. One is business people are, usually can sell better. But if you do not, if a company do not really put a focus in technology, then it's hard to scale. And I hope to see more and more startups that can really use technology and really leverage technology to really, one, scale faster and be defensible, because to create a good product, there's a lot of thoughts and there's a lot of effort that needs to be put into it. And prudent cash management to minimize burn rate. So this is also something that's very important. I think one of a quick way to check whether a company is doing a great job or not is not by looking at the traction alone, but also looking at what they spend, how much resources that they have spent to reach where they are now. So it's not about the quantity of the traction, but the quality of the traction. And also burn rate is very, very important, especially since in technology there's a lot of uncertainties. Having a big overhead cost, have a big burn rate, it will jeopardize and also make the chance for the next funding round tougher. So that's also one thing that, especially in the early stage, that the company need to pay more attention to. And also large enough addressable market size and clear monetization strategy. So one very big problem in Indonesia, not only in technology and also in other industries, is talent. In technology, talent become much more important, because at the end of the day, it's only about execution. I can give you a lot of ideas now, but if no one executes, then it means nothing. And how great talents can join the company, can build, can follow you, right? It's also, they look at the vision, they look at how big this can be. If let's say if a company is not doing something that's exciting, it's not doing something great, not doing something that can change how people live, people do things, maybe it will be hard also to find talent. So that's also, there's a correlation between talent, the addressable market size, the talent, and also the funding. From investors' point of view, this is a risky business, this is a risky investment. Of course, what we want is an investment that can give us big enough upside, so that the risk-adjusted reward, we always use the risk-adjusted reward. So if let's say the upside is big enough, then hopefully it will pay off in the future. So basically, those are a few points that I want to share today. I hope that's useful, and I open it for any questions.
Thanks, that was incredibly interesting, and I think you've made a huge amount of progress. Just on the issue of the question of bubble in Indonesia, in particular, you raised the kind of large companies we've seen emerge in the U.S. and in China. U.S. was kind of the leadership. China got there. I mean, most of those things are developed there because they had a very closed market. So like the Google of the US is Google, the Google of Indonesia is Google, the Google of China is Baidu.
Yes.
Right? So, for example, we now see people like JD arriving in Indonesia. We see groups like Lippo Group with Matahari Mall coming at it very aggressively from what we've seen over the past few years. How do you think, one, what do we need to do to really have our own super champions like they have in China? Can we? And then secondly, it does seem a bit more real now, and the money that's going to come at it, how is that going to change the landscape of so many smaller entrepreneurs, less well-funded?
Okay, I think that's very good questions. I think there are two questions, right? The first one, in terms of the I think it's more verticals, because you mentioned about the search engine. China is closed market. That's why they can have their own search engine, but not in Indonesia. I agree with you, and I think in Indonesia we need to understand which vertical is more likely to be quite defensible by the locals and not by the giants, right? Let's take fintech, for example. In order to create something in Indonesia, you need to understand regulation. You really need to have people on the ground for data verification risk and all that. That's something that cannot be done easily by the foreign. So I will say in that kind of vertical, everyone has a level playing ground, and maybe people with the local flavor, with the local network, can execute better. So the answer to that, I will say the different vertical have different dynamics. That is why we need to really carefully look at which sector that makes more sense, especially for the smaller entrepreneurs, so that it can be quite defensible. But even though, if let's say there are big companies who wants to come to Indonesia, being acquired by them is also, for some companies, is also can be a good exit strategy. So it's not a totally a bad thing also. And in terms of the second question on how those large investments affecting the ecosystem, I think it's good. First of all, I think the word on the street is that they're screwing up the salary level. So suddenly, everyone just want to get more salary. So that's a downside. But that's the problem that we know it will happen, because there's a shortage of talents. But for the small one also thing, those big conglomerates or maybe big groups or big whatever, the big companies, they tend to look at the big industries. So yes, why e-commerce? Because e-commerce is huge, right? But e-commerce is not the only vertical that can be invested or that can be worked on. There are other sizable verticals that's still wide open for the smaller entrepreneurs to work on. And I believe in the current environment, the opportunity is massive, but the problem is maybe more on people who can really execute it well.
Thank you very much for the extensive presentation. I think this is very insightful for all the angels over here, since Keiretsu is a renowned angel forum. I think it begs the question, how would an angel investor or aspiring angel investors can contribute to this tech community and make an even better ecosystem, in your perspective?
Yes, so I think that's a very, very good question, because that's very relevant for all of us, right? And thanks for bringing that up. I believe angel plays a very important role in technology. If you look at in the US, there are a lot of angel-backed ventures, especially in the early days, whereby not a lot of formal or institutional investors available in the market. But being an angel is not easy. Based on my experience, so I was an angel investor before Alpha JWC. So the companies, strong founders, experienced founders, they expect value add from their investors. So for an angel, I think I think the more logical thing to do is, of course, by having like a consortium or a group of angels coming together, and then look at what the value add that this group can bring. Because the truth is, being an entrepreneur is a very hard job. They will need all the helps that they can. So one, of course, by coming together and forming a good group of angels, that's definitely very, very helpful. And then second is maybe to get to really learn and understand more about the technology market, because I think the problem with angel is that maybe the understanding is not there yet, right? Especially angel, they have a full-time job, and investing in technology sometimes it's a learning curve. So that's why coming to a forum like this, and also some of the angel group, it will help in terms of understanding the market more, and then maybe by talking to the entrepreneurs, to the startups, and maybe also to the venture capitals, it can help in the understanding. But one thing I want to share is of course, by coming together, there's share the risk, share the knowledge, and grow together. I think that's quite a good way to do it.
Yeah. Question. So, thank you again for explaining related with the bubbles. I think something that is different compared to year 2000s at that time, where internet is just booming. But well, some people think that the bubble is beyond than that. Like for example, right now, investors are only looking at the growth, the potential growth of the startup companies. But in the end, people will also consider the profit. Up until now, the 4 startups that you mentioned, probably they're still kind of having a challenge in the profit, in terms of profit. By the time probably they reach almost profitable company, but then there's coming another one, the second or the followers where they have better idea, more effective. And I think us as angel investor will think that, hey, why do you need to spend in the first one? Why don't we wait for the second one? So what is your opinion in that area?
Yeah, so that is why I started with the slide on how these technology companies can really disrupt, right? The reason why I have that slide is to make a case in point that when a company becomes so large, when people are really need to use that product, there's a value in it. And at the point of time, of course, they will make money. And also, if I just go back a bit on this, the last point is that the large enough addressable market size and a clear monetization strategy. So I think every investors invest in company with a clear idea on how they can make money. Some of the big companies that I showed there, of course, not everyone is making money, but looking at the examples from the developed market and all that, we know how they can make money, and we also know how valuable they can be. So I think this is something that for the non-technology investor, this is the most difficult point to understand, right? No revenue, come on, no revenue, how do you value it? No revenue means no valuation, right? I have a lot of my friends who are CFA. I work in Ernst & Young before, doing evaluation, doing due diligence. It's all fundamentals. But if you only look at that point, that's true. But one thing that we should not forget is that there will be a time whereby we can value a company based on the DCF. Right? And if you ask about the growth and the profitability, I would like to share with you one very interesting article that I read recently about Amazon. Amazon is listed companies. Is there any profit? No. Is there any growth? Yes, a lot of growth. And why they're very big, they're growing, why they do not distribute any dividends? Because that article mentioned that whenever they start to give the dividend, meaning that they do not invest in the future, whenever they do not invest in long-term continuity of the business, then they will lose edge. So I think this is also what's important for a technology company to understand. I come from Groupon. It's a global company. Just to share a bit of my experience. Once they got listed, their focus is more on the short term meaning profitability. And now I'm already a listed company. We need to focus on profitability. The fact is that in some industries, in some countries, maybe it's not the right time yet to think about profitability. Because why? The market is still so big. So maybe acquiring more users, really grow big and be as big as you can in such a early market. Maybe that's the right approach to think about it. Just also to share one example on my experience in Groupon. I was a CEO in Groupon. I got quite a lot of experience benchmarking the numbers between Indonesia, Singapore, and all that. One thing that I can tell you is that to acquire a user in Indonesia, it's generally cheaper than acquire a user in Singapore, in Hong Kong. If we are in that environment, maybe rather than saving the money or maybe focusing on profitability, if the company can have the ability to acquire user more aggressively, maybe that's something that needs to be done, right? Because getting bigger, you have more leverage, you have more network effect. And the beauty about technology is that the scalability. Anyone in technology business need to really think about one thing only, which is scalability. That's something that's phenomenal. Traveloka is a 3-year-old company, and their revenue now, I do not know exactly, but I heard it's amazing, right? It's even surpassing companies that's been around for 10, 15 years. So sometimes maybe looking at the growth at the right time is the right thing to do.
Thank you. Please stay on the stage, Mr. Jeffrey, for a moment, please. Because Mr. Frediwala will give you a token of appreciation. Please wait a moment. Thank you. This is a token of appreciation from Keiretsu Forum Indonesia chapter to Mr. Jeffrey Joe. Thank you.
Okay, for the next program is what we call Mindshare. So I would like to invite the presenter to excuse yourself, go to the other room because we are going to talk about you. Okay, so this is what we do. We are going to talk just 2 points. First, on the positive side, and then the second one is challenges. We don't say negative. Okay, first company is Zenix. What are the positive points? Just one line.
The entrepreneur has a great track record, so he's very credible.
I think Zenix has proprietary technologies. I think the entrepreneur made a point that the lack of API is actually a strength by itself.
I think this is probably among the speakers are the one that target a commercial business. The rest of it is pretty much consumer, and commercial business is mostly where the money is.
Okay, good point. Thank you. One more.
From industry knowledge, it's something that I haven't seen that exists.
Okay, now let's talk about the challenges. Anybody?
There's one. Despite of their software as a service company, as mentioned in here, but still I believe there is a need to have kind of credible consultants for deployment. I haven't seen any of that in the presentations yet.
Okay, need a credible consultant. Yeah. Okay, good. Anybody else?
Typically, enterprise selling is a very tough job. So it's not clear what experience he brings to the table and others bring to the table in selling to the enterprise.
Sales cycle is long. Yeah, good point. Sales cycle is long. Okay, next let's move to Turing Sense. What are the positive points about this product? Yeah.
Turing Sense is one of the few multi-sensor products in the market. And as it's mentioned, it provides an ecosystem for data. Also, the software developer can tag into this platform to build various of applications for different sports, healthcare, so they can get revenue from both hardware and software.
Anybody else? Oh yeah.
I guess it's strong proprietary tech and patents, and I think there's still a lot of room to grow here. So I don't see it beyond tennis, beyond golf. It can go to other sports and AR and VR. Thanks.
The way I look at it, they can also go to physiotherapy business beyond just sports mechanics.
Yeah, excellent point. Good. Okay, how about the challenges? Oh, Pak Antonis, maybe why don't you take one?
So I like the idea or the concept of being kind of coaching and then as well as related with the he mentioned the Roger Federer. So the best move as an athlete and how we compare it against that one. So that's a good one.
Okay, excellent. Cool. How about now the challenges? Anybody from the audience? Challenges for Turing Sense?
Well, I think I want to add, as a wearable users, I think there are plenty of them in the market already in the US. Even the one that I mentioned, Move Now, is actually measuring the similar thing, but they fast and they go live already. So I think the challenge is they still prototype right now, and I don't know how long it will take, but they have to kind of be fast then, because the competitors are already there. Even big companies like us, even Microsoft is also generating Microsoft Band too.
Oh, okay, good. Yeah, good point. Anybody else on challenges? Okay, let's move on to this Ului. Positive? Yeah.
I think the idea is pretty creative. It liberates multiple layers of services in the transportation. I think logistics is a particularly big, huge problem in Indonesia, considering that we are the largest archipelagic country. And I think the current logistics service doesn't really cope the demand. So I think there's a big opportunity. It's just execution and the reliability. I think that's a great point. How do you maintain the quality of service?
Anybody else for positive? If not, let's go for challenges.
I think the biggest challenge is how they can coordinate the different vendors for the service. Also the safety of the goods. Yeah, and also I think it will take a lot of resource and expensive for them to do such coordination. So how can they make their price competitive? The main challenge is how to bring together all the parties into the platform in the first place. Since it's a marketplace, one of the most important things is the liquidity of the marketplace, like the minimum number of supplies and minimum number of demand for transactions. And where do they start is really crucial, like where do they start in operations, like in cities and so on. It's really crucial for them in the first place.
Yeah, I actually think that there are some real opportunities between parts of the world that don't have the same vendor on this side and the other side. We've seen that trying to get stuff into Indonesia across the world. But I think that the complexity is trying to figure out the gearing between different organizations. But I actually think there's something there with some specific routes between Indonesia and other parts of the world where there aren't the same carrier. The grease in that route is going to be challenging. Luke Roush, Southwest Capital. Thanks.
Okay, so next we're going to divide into groups. We spent maybe just about 15 minutes with entrepreneurs. So if you guys are interested in the Zenix business, please sit around that table. Can you call the Sikan? How many people are interested to know more about Zenix? Yeah, please sit over there. Everybody who is interested to know more about Zenix, you can go to that table. Yeah, number 5. Okay? And then anybody who is interested in touring sets, you can sit in the central table. Right here. Okay? Can you call Edward? Yeah. Edward and yeah. Anybody interested in touring sets? Can you sit in the middle of it? Okay? And then the last one, anybody interested in Ului can sit here in the front. Okay? We will have about 15 minutes discussion among them, and then we will have some dinner right after this. Okay? Thank you.
Hearts alive.